And welcome back to the Financially Simple Experience. I'm your host, Justin. Today we're going to talk one last time about insurance, at least for this little short series that we're on. We're dealing with calculations, and I want to deal with how much disability insurance do we actually need as business owners? How much disability insurance does a business owner need? Well, in order to understand that, we first have to deal with what is disability insurance. Disability insurance is meant to protect us in the case that we lose our income. We can't work. We become disabled. Think of it like income replacement. Okay, you're not able to work to produce income, so you're going to get a benefit from an insurance company. Now, it's interesting to note that most disabilities are caused by chronic conditions, not from accidents. See, I've been doing this a long time. When I start talking about disability insurance, individuals often say, well, Justin, I don't work in a position that I'm going to get injured. I mean, think about me. I stand behind a microphone, folks. Come on. Chances of me becoming disabled is very slim. So it's interesting to realize that most disabilities come from a chronic condition, not from accidents. Now, can accidents happen in the workplace? Of course they can. Of course they can. We actually have clients who work in high-risk jobs, and thus their premiums are a little bit more expensive. So we're going to talk about that in a second. When we're talking about disabilities, though, it's interesting to realize that about 1 in 4 Americans of adults in the United States have a disability. 1 in 4. That's crazy. This proportion only increases the older we get. So 40%, okay, almost half of those individuals over the age of 65 have a disability of some sort. Now, what's interesting is by the year 2030, so roughly in about, 8, 9, 10 years, people 65 or older will actually outnumber children for the first time in U.S. history, in the country's history. So we're going to start to see more and more disabilities the older our population gets. 20% of all people in the United States report some portion of a hearing loss. That's about 29 million people who suffer from hearing loss who have to use hearing aids. I got to tell you, on a side note, my hearing is getting worse and worse. The older I get, the less I'm able to hear. I've got to go get my hearing checked. My wife says I'm falling apart. You may have noticed if you're watching us on YouTube, by the way, feel free to go to YouTube and check out Financially Simple. I have a lot of gray in my chin hairs now, my little beard that I'm growing. A lot of gray. I'm told it makes me look distinguished. Those of you who are able to watch it on social media, leave me a note and say, buddy, you do look distinguished. I need a little bit of encouragement these days. This getting older thing is for the birds sometimes. 2.3% of people in the U.S. have vision disability. 7 million people, roughly. 1 million people in the U.S. are legally blind. 16% of the people in the U.S., roughly 40 million people, actually have difficulties in their physical functioning. Roughly 8 million people have an intellectual disability, including about 500,000 children. In 2016, which was the last time this study was done, about 77% of people in the U.S. without a disability were employed full-time or part-time, but only about 36% with a disability were employed. So we do have this risk. Probably the most stabilizing or most sobering factor I see is that 1 in 4 Americans have a disability, and the older we get, our percentages increase, knowing that almost 40% of Americans who are 65 or older have some sort of a disability. So, friends, disability is a reality. In fact, candidly speaking, you're more likely to become disabled than you are to die. Or die of an accident or die from a unrelated cause. It's really interesting. We actually have a greater risk in our disability. We are a money machine. We business owners make money. Many people rely on us. Not only do we personally, but our family, our customers, our employees, our vendors, lots of people rely on us. So we have to look at this idea of disability insurance as a guardian against the what if. So how does disability insurance work? Well, here's the simplest answer I can give us. The disability benefit, which is what they call it, is based on our actual wages and can be as high as 60 to 70% depending on the type of industry you're in. So let's tear that apart. Wages. Wages is what the insurance company is going to look at in determining your actual benefit amount. It's not your gross income. And this is where a lot of business owners get flustered. Been doing this a long time, friends. Business owners, they say, look, I need to get some disability insurance. I'm in construction. I work on cars. I'm a dentist, whatever it is. I need some disability insurance. I don't have enough assets right now to where if I became disabled, I'm not going to be able to feed my family. My kids are going to be destitute. I'm not going to be able to continue the same lifestyle I have now. Okay, so we begin this thing called financial underwriting. Financial underwriting kind of works like this. And this is where many business owners are surprised. Let's say that you have a take-home income of $100,000. I like to use that as a round number because it's an even and we can usually divide or multiply percentages by 100,000. So let's say you have a take-home income of $100,000. Of course, I'm not including all the income that you use through the business, all your different perks that we business owners often can get. I'm talking about this is what you actually deposit into your bank account is $100,000. Yet, last year, you purchased a pretty large piece of equipment for your business. And you use depreciation on this piece of equipment to reduce your taxes. Let's say you did 179 bonus depreciation. And because of this equipment's interaction with your tax bill, it actually reduced your income from $100,000 on your tax form to roughly $20,000 on your tax return. Now, I realize that you, quote, made or you deposited $100,000 in your bank account, but the tax return only says you made $20,000. And that's what the insurance company is going to look at. And they're going to say, you're eligible for coverage of coverage based on your $20,000 reported taxable income, not on the actual $100,000 that you deposit in your bank account. It's very interesting when you think about that. So whenever they're calculating a disability benefit, they're looking at your wages, not at actually how much money you live on. So that throws a curveball at a lot of business owners. And if you think about it, what it really means is, unless we have enough cash set back and investment set back out of the business, if we become disabled as business owners, chances are the insurance coverage is not going to be enough to cover the lifestyle that we're used to. Friends, are you seeing how it all connects at this point? This is why I often talk about having enough cash. Save, save, save. I was actually listening to Dave Ramsey this morning. He's still one of my heroes in the financial world. I've said many times that I disagree. I disagree from a professional level with some of the things he says, but I agree philosophically with what he says. And he was talking about his baby step program is to put 15% of your income. And he was talking specifically to a W-2 employee. And as he was talking to that, I looked at my wife. I said, what's interesting is he's not talking to a business owner. I believe we should be saving 20% of our gross income, the actual portion that we live off of as business owners. Dave Ramsey was saying 15 for W-2 employees. But if you bring disability back into the key, guys, even at 20% savings rate, and you've been doing it for a while, chances are you're not going to be able to purchase enough disability insurance to fully cover the lifestyle that we're used to. You say, well, okay, but what about Social Security? You know, I've been paying in. Yes, we have. And I really believe, friends, that with the tax reform and the Social Security reform, that we're going to pay more money through our payroll deduction or through our self-employment taxes. So, yeah, we've been paying money into Social Security. True, we have. But Social Security is a little different. Having long-term insurance can be a benefit because let me say that again. Having long-term insurance can be beneficial because being approved for the Social Security process is a long process. So in order to get Social Security approval, it takes sometimes weeks, months, years to get approved for Social Security. Because in order to receive Social Security benefits, you have to meet the strictest criteria set up by the Social Security Administration. Basically, you can't perform any kind of work duties. You can't do anything. So you say, Justin, what about Social Security? Yeah, if you're counting on Social Security benefits, you cannot perform any type of work duties because of a medical condition. That's a little different than what I envision. I envision that if something happened to me, I want to continue to make the same amount of money. And if I could not talk, because I do a lot of talking, that I would still want to do something. Maybe I can drive a tractor. Maybe I can cook pizzas. Yeah, buddy, cook pizzas. But I wouldn't probably make the same amount of money driving a tractor or cooking pizzas as I do doing my day-to-day job. That's a rider on long-term disability called own occupation. We're going to talk about it a little bit, and we've talked about that a lot in the past. So if we're relying on Social Security, you're going to have to be totally disabled in order for it to kick in. Long-term disability insurance, if you position it properly, you can actually get benefit sometimes without having to have Social Security disability. Now, many insurance companies are trying to reduce the amount of money they pay out of pocket. And so a lot of them will actually require you to apply for Social Security disability insurance. SSDI is what we call it. And if you're approved by the SSDI, the insurance company is going to try to reduce the amount of money that they have to pay you. So here's an example. Let's say you were receiving roughly $1,500 a month from the disability benefit, and the Social Security says, hey, we're going to give you $500 a month. Simple math. You were receiving $1,500. Social Security says we're going to give you $500. These are just arbitrary numbers that I pulled up. Your insurance company is actually going to reduce what they were paying you down to $1,000. Why? Well, because Social Security's picked up about $500 of the $1,500 monthly disability need that you have. So friends, I'm trying to drive this factor home that Social Security disability and long-term disability have two different types of definitions of disability, have two different filing requirements, and they're used for two different purposes. I personally believe that long-term disability is a requirement for business owners. I do. And I believe we should try to get as much as we possibly can. Now, we typically can get about 60 to 65% of our taxable income in the form of a benefit. You say, well, Justin, man, that seems awful. How much does it cost? Well, it costs about 1 to 3% of your salary, depending on what type of career you're in. Okay. So I need roughly 60 to 65%, and it's going to cost me roughly 1 to 3%, depending on the type of career. Yeah, those are ballpark numbers. But it's a lot more to that. And I've spent a lot of time talking about the different types of different types of disability benefits. I spent a lot of time talking about the different types of disability benefits. I don't want to rehash that today. We'll put links in the show notes and put links on the blog post on Financially Simple back to those type of conversation. Here's what I do want to drive home. As business owners, we need personal, long-term coverage disability insurance. And if it's available, on occupation, meaning that if you can't perform the exact same thing you do to produce money right now, that you could go drive a tractor, if you're me, drive a tractor and maybe flip pizzas and still make an income, but yet you're still receiving your benefit. See, if we can do something else, but we're unable to do our specific job, Social Security DI is not going to kick in for us. So I believe we should have 60 to 65% of our taxable wages in long-term coverage, long-term disability coverage. But that's not all. Because we're business owners, we also need to have business overhead disability. And I've spent time in the past talking about this, but how much do we need? I believe we need to have 12 to 36 months worth of expenses covered for our company. This is how business overhead disability works. Basically, you're going to have to list out your expenses and provide tax returns, maybe a financial statement showing here's your monthly carry on your business. And depending on the type of business you're in, the insurance company is going to say you can have 12 months worth of coverage all the way up to about 36 months worth of coverage. Why? The idea is for the business not to suffer. The idea is if you, the business owner, cannot work, then the business has enough money coming in to keep everybody viable, which hopefully gives us time to sell the business or to liquidate the business or to wrap up the affairs of the business. That's all it's there for, just a very short period of time. So do you see how valuable the individual coverage is? See, many times business owners have this idea. I've heard it many times. They say, I don't need disability insurance because if I become disabled, the business is going to continue to provide me my income. And most of the time, these are the very people that the business is 100% reliant upon them in order for the business to survive. And I'll say, no, it's not. You know better than that. You're at the epicenter of your business, as I often say. So friends, disability insurance, yeah, it's one of those insurances that we have to deal with. It's kind of expensive if you want to look at it on a cost per, as a percentage of income, 1 to 3%. Yeah, it could get a little pricey for insurance, but if you need it, it saves your bacon. I know too many people that have used disability benefits to keep themselves and their family secure throughout their remaining work years and even into retirement. So if you don't have any long-term disability insurance as a business owner, now's the time. We're not going to do any insurance conversations for a while. I'm about tired talking about insurance. So now we're going to start diving into a list of your questions. Some questions that we've been fielding from you, and we're going to cover those in the upcoming episodes. Look, friends, I realize life is hard. I get it. And life is frustrating, but it doesn't have to be. We're going to continue to make our life at least financially simple. Y'all make it a great day. This tip is for informational purposes only. Please speak with a competent financial advisor regarding your specific needs. Justin Goodbread is a registered investment advisor with Heritage Investors. Visit heritageinvestor.com, financiallysimple.com for additional information.